Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 8th of September 2018 and we're providing our gold and silver weekly update for the week ending the 7th of September. Gold fell $5 last week from $1,201 to $1,196, having hit a high of $1,206 and a low of $1,190. In sterling terms, gold finished the week down £1 to £925, and in euros it closed at €1,035, unchanged on the week. Silver fell 39 cents from $14.53 to $14.14, having hit a high of $14.54 and a low of $14.04. In sterling terms, it closed at £10.94, that's down 27 pence. And in euros, it closed at 12.24 euros, that's down 0.28 euros. The gold to silver ratio rose yet another week from 82.65 to 1 to 84.58 to 1. The Dow Jones closed on Friday at 25,916, down 79 points on the day and down 48 points on the week. And the Nasdaq closed at 7,902, down 20 points on the day and down 207 points on the week. Brent crude fell 81 cents from $77.64 to $76.83, and US light crude fell $2.05 from $69.80 to $67.75. The dollar index stands at 95.36. That's up 0.22 on the week. Whereas the week before last, gold vacillated within a $17 range, this past week it vacillated within a $16 range, but at a slightly lower level. Prices were up at the start of the week but fell quite decidedly on Friday after better than expected job figures were announced. It certainly looked as if that gold was going to hold above the $1,200 level, but the non-farm payroll report put paid to that. So let's briefly cover what it revealed. Non-farm payrolls increased by 201,000. while the unemployment rate was unchanged at 3.9%. Economists had forecast that 190,000 jobs would be added and that the unemployment rate would fall to 3.8%. Wage growth was more impressive than forecast. Average hourly earnings increased by 0.4% month on month and at 2.9% year-on-year growth. Wages increased at their fastest pace since June 2009. August was the 95th consecutive month in which American employers hired more people than were fired, and there's never been a longer streak. Traders are now conflicted as to gold's direction. There is clearly some support at or around $1,200, but all are aware that the strong dollar, supported by emerging market turmoil and the prospect of higher interest rates, will dictate its price in the short term. What most agree on, however, is that should gold fall below $1,150, then $1,000 gold is clearly in sight. Most, however, anticipate a small bounce back this coming week, though we suspect prices will again be range-bound and potentially slightly weaker. Silver prices just seemed to fall from Tuesday, and apart from a slight blip on Thursday, continued its descent. Again, $14 offers considerable support, and should silver fall below it, then frankly there's very little resistance until we reach $13. Again though, as with gold, silver's price is heavily influenced by the strength of the US dollar. We are, however, very aware, as we said earlier in the week, that the gold to silver ratio is again reaching that sort of level which normally leads to a small correction between the two in terms of price. And although this is not guaranteed, silver relative to gold is beginning to look very cheap. So what news is likely to affect gold and silver prices this coming week? Well, on Monday we have the survey of consumer expectations for August and consumer credit figures for July. Tuesday, wholesale inventories for July, and Wednesday, producer price index for August. Thursday, consumer price index and core CPI for August, and on Friday, retail sales and industrial production for August. So another quite reasonable week for data, which can have an influence on US dollar value. We have to admit that precious metals have taken a small pounding these past 5 weeks, and a small correction is due. However, we can see little immediately ahead of us that will weaken the US dollar, especially with the emerging market turmoil causing investors to invest in the US dollar and evacuate their own currencies. What particularly gives us the view that the dollar has further to rise is the jobs report showing wages strengthening. This is likely to bolster the Federal Reserve's decision to raise interest rates, as it is widely expected to do when it holds a policy meeting September 25th to the 26th. In particular, the Fed may view the increase in wages as a sign that inflation is picking up. So whether it does raise rates or not, the expectations will be that it will, and therefore we are still likely to see a stronger dollar and therefore weaken gold prices towards the end of this month, regardless of any slight recoveries we may see over the next few days. We are indeed also acutely aware that normally September sees higher gold and silver prices because of the Indian love trade, and this is why we are not necessarily forecasting a major fall in the gold price, as Indian demand for gold and especially silver has been strong this year. But we still believe that on balance, the dollar value rules. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on Twitter. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.